Welcome back to Loan Officer Success Partner. I'm Devin Dubuc. I'm your host today, and I've got an originator spotlight for somebody pretty epic, man. This guy is he's doing some really cool things out there. And I thought, man, what a great opportunity to spotlight him, bring him in, and share a little bit of a story. Jerry Holcomb with Premier Lending. What's going on, brother?
Hey, man, I'm doing great. Great to see you out here today, and thank you so much. Yeah, my name is Jerry Holcomb with Premier Lending, and I've been in the lending space since 2003. And before that, I was working in high technology, designing, developing IBM mainframe computers. I got out of that space. The dot bombs came out, and my admin's husband was a loan officer. And I was talking to him. I said, man, what does a loan officer do? I've bought houses before, but really, I didn't know what a loan officer did. And he told me, man, I help people buy homes. I help people save money on refinances, and it's helping a person instead of working with a corporation. So I started that, and I've been living it and loving it ever since then, man. It's a great thing to do.
Yeah, so 2003, that's around the same time I got in. It was 2002 for me. I'd also been a homeowner. And you know what was funny is, even though I was a homeowner, I didn't know what a mortgage meant. I was like, oh, I got a loan on my house, right? Oh, that's what a mortgage is, right? Like, oh, big surprise, right? So at the end of the day, we all start our journey somewhere. Yours was in 2003, and I remember that market, right? That was and actually it's a pretty healthy market. We were coming off of a refi boom, rates at a whopping 6.5%. I think we drove down to 5.5 by the time you jumped in, right? And it was a great time to be in the industry.
Yeah. As a matter of fact, when I got started, the day I got my license and got to working, rates started going up. And we had about 18 Fed hikes on after that. But at the time, there were so many loans. If you had a pulse, you could get a loan. Yeah. They had liar loans out there. They had any kind of loan out there for folks. And some of them, it got to the point that where it was like, this isn't really helping somebody if they're going way above their means.
That's right.
So I really kept the people into the line that where they could affordability was really key to me, not somebody that's going to get foreclosed on the first month. So, but helping people get a home and seeing that look on their face at the closing table when you're sitting there watching them get the keys, man, that was so much better than working with high tech companies out there or working in the middle of the night like I did when I was on the mainframe stuff. So it's really it's a passion to do this. I wake up dreaming about this. When there's an issue on a client, man, I lose sleep at night. It's because I want the house. I want them to have the house. Yeah, I care. I care what they got. Absolutely.
Yeah. Well, I love that you go back and you talk about some of those old lending programs, Nina, NoDoc, Nina, CISA, Ninja. Yeah. And then, you even had, like the rapid rescore, where you could use somebody else's, the other party's credit score as the qualifying score with 100% financing and no appraisal using an AVM. Was that really a great market for our clients? No, and it definitely wasn't a great market for our country because it tanked us, it tanked us and it tanked us hard. When those loans started to default, man, wow, the day the world turned over.
Yeah, it was tough, man, to see that. And when you would get account reps coming in and talking to you going, oh, man, just make it look like this and we'll take it. And then all of a sudden, when the market crashed and the boom happened, if you haven't watched The Big Short, man, you got to.
Yeah,
I learned a lot of things myself from that Big Short movie.
Yeah.
But when they would come in and do that, and the next thing you know, all of a sudden, boom, everything's crashed, countrywide's down, and you could have cash and you were still questioning if you could buy a home at that time.
Oh, 100%. The lenders didn't know what they could do. The underwriters didn't want to underwrite. They were afraid what they could put their hands on. Yeah. And there was no real confidence in guidelines.
That's right. And then you could have a good loan and it would be sellable and the lender would not accept it. And then you'd have to scratch and dent it as a company. So it got really scary there for a while.
Oh, it was scary.
Yeah, it was.
08, 09, 08, all the way up into 10. There was definitely some scary parts of the market right there.
Yeah, absolutely. But the biggest part was staying with it and letting people know that they're still going to gain and grow wealth by owning a home versus renting. And that's the biggest thing that I still talk to folks about now is this is generational wealth that we're trying to help people with. It's not just where do you put your head down at night? It's not just you have a place to go to. It's you're building wealth. And that's more important than the rate. Because I will tell you, everybody asks about rate in our business, right? What's your rate? I will guarantee you most people have no idea what the interest rate is on any of their credit cards that they're in their wallet.
Ooh, man, that's a great question to bring up too, because what we know right now here in 2025, average interest rate on a credit card is 25 to 30%.
Yeah, absolutely.
Yeah.
And if people are making the minimum monthly payment, it's going to take 28 years to pay it off if they don't put any more on it. So you got to look at the way the full financial picture is for somebody. And that's really what's more important than just getting them into a home, just helping them get to that point and then them struggling afterwards. I want them to be successful as a homeowner.
Yeah. Well, you mentioned legacy too, and at the end of the day, I don't know that everybody looks at it that way, right? They should. But ultimately there's so much opportunity for financial wealth through real estate. And, a lot of people don't understand that homes appreciate on average 5.5% per year. And, effectively, the home that you buy now is going to be worth a substantial lot more money in the next 2, 3, 5, 10, 15, 20 years. And that is generational wealth. And there's a lot of folks out there that have never seen any type of wealth. And when they go to sell that first home that they've built $50,000, $100,000, $200,000 in equity in, they start to see a real financial gain that they never knew before.
Yeah, absolutely. I mean, the big thing is helping people to understand that with owning a home, you put a piece of it called the principal back in the foundation every month that you make a payment. And then the house appreciates because they're not making any more land. They're building more houses, yes, but there's still that house is still growing on the other side of that called equity, where if you're renting, when you leave, the landlord says bye and you get zero going out the door. And they made a bunch of money. You made them tons of money in their equity that you're building for their generational wealth. So do this for yourself. This is what we do. Yeah. This is why I love the passion. And it's what wakes me up and gets
I feel it, man. I feel the passion, and going back to the landlord thing, I like to talk about this one all the time because I think this is we know the answer, but I'm still going to throw it out there. Right. So I go to my landlord and I say, look, here's the deal. I'm going to move in. I don't want you to move my rent over the next 5 years. I'll promise to stay here for 5 years, but I want my rent to go up for 5 years. It's going to stay exactly what it is, right? Yeah. And in addition to that, at the end of the 5th year, I'm going to split the equity that you've built on this property. I want 60, you keep 40. How's that sound?
Yeah. No,
it's not happening. It's not happening, right? But if you do a mortgage, right, and you go out there and you purchase your property, 5 years later, you've built equity. And where did that equity come from? It came from the principal that you're driving towards the balance. But in addition to that, the equity of the property has gained over those last 5 years. Yeah. And at a 5.5% return, you're doing pretty good.
Yeah, absolutely. I mean, if you look at the math, if you put, and I'm just going to use an easy number, $10,000 to buy a house, at $10,000 on a $100,000 house, and I'm using small numbers, is going to grow at 5%. You take that 5% and you've got at least $5,000 right there that you got in equity on $100,000. But if you take that same $10,000 and put it into a stock like IBM, Apple, or any of that, and they get 5% on that $10,000, you only got $500. So what makes more sense? Putting more money into the 401ks and putting it into the stocks, or putting it into the house and letting the house grow? Because the bank is actually giving you a bigger piece to make equity off of.
Well, now take that $100,000 and make it $500,000 because that's probably more likely in today's market,
absolutely,
right? And now take that $10,000 that you put down and make it zero because we've got programs that allow for you to do that. And now watch that 5% growth year over year. That's $25,000 in the first year, and it's just going to continue to grow over the next 10, 15, 20 years.
And that number is a compounded number, by the way, for every year. So it's just the financial part of this and helping people learn the financial literacy of owning their own home versus renting. Now, I do think that rent's good for folks that are not going to be in a home more than 2 or 3 years, or in a location for more than 2 or 3 years because they get job changes and stuff. But for the average person that's going to be at 3, 5 plus years, or even 10, or for like me, I've been in my house for 24 years. I don't plan on moving. That house is gone from 130,000 to over 500,000 in that time frame.
Well, I'm going to challenge you on that too, because you said, hey, it may make more sense for you if you're going to move around a lot. Well, that's great. Don't buy the house you plan to live in. Yeah. Buy an investment property.
Yeah,
right?
Absolutely.
Buy a vacation home, right? Yeah. Buy something that you can utilize to build equity and let somebody else, pay you rent, right? And build your equity for you. We talk about this just earlier today. There's a great strategy that it's not new, but a lot of people don't realize it. When you've got a child that's about to go to college, right? And at the end of the day, if you know where they intend to go and there's multiplexes available, buy that property for your student and allow for them to live and occupy in one of those units, and then lease out the other 2 or 3 units or more if you're able to find that property. And at the end of the day, now your child is going to school and building equity and simultaneously paying for some of that hard-earned tuition.
Absolutely. And that's one of the things that I'm working on right now, because we got a lot of people graduating from high school, getting ready to go to college. If you get them to be able to help you put together and buy a house for them to live in and even rent out rooms, if it's got 3 or 4 bedrooms in that place.
That's right.
And they're on the mortgage with you. You're building them mortgage credit. You're building them credit for the rest of their life. But that rent's going to help offset and pay that. The house appreciation on it, when you look at that over a 4-year term, that may have paid for their college right out of that.
That's right.
So let that be their tuition reimbursement back from them owning that home, and you get it. And plus, you get to go see your kid and your investment, and you get to write it off on your taxes. So there's a lot of benefits of doing exactly what you're saying for that.
That's right. Well,
for folks like that.
But wait, there's more.
Tell us more.
At the end of the day, you don't even have to put a big down payment down on these properties because the banks are going to recognize that as you purchasing a home for your child that's a student. And now you put the standard 5% or 3.5% down to be able to purchase that home as if it's a primary residence.
Absolutely. Yes. Well, you can, and with some cases, we'd have to look, but in some cases you may be able to put 3% down. But you got to look at what's going to make sense for you to do. And at the end of the day, your son is the landlord for all the other folks. You guys are making money on the house as it appreciates, and you get to go see them and write it off. I mean, it's just a win-win for everybody, and they get a good education about financing. So it's a great thing to do for folks in this time frame.
That's it. Well, it sounds like there's a lot of loopholes, and we're just talking about one. I mean, there's so many, though, right? You've got down payment assistance programs. You've got buy down programs to make rates more affordable in today's market. You've got DSCR loans for investors who can't show their cash flow, who don't have the ability to document it with W-2s and tax returns, right? We've got bank statement programs that allow for you to utilize the cash flow that you do have without having to document what your income is after the write-offs. Let's be honest with each other. If you're a successful self-employed person, you're probably not documenting everything on your tax returns to report to the IRS.
Absolutely. Hey, IRS is not watching, right? So, absolutely. You do have these kind of programs. The DSCR loans, the debt service ratio loans, is kind of like every building, the building that we're in, every place that you see that is a commercial space has a loan on it. And it's not based on the person's finances that's doing it. It's based on the rents that are recovered from that. Every apartment, every hotel, every business that's out there, it's all on that. And you can do that the same way on homes, where we're using the debt service, the rents on that to offset that. And now you've got an investment property that you can make money off of.
I've never thought about it from that perspective. And I love that you just broke it down like that, because at the end of the day, you become the tycoon, right? Like, we all played Monopoly growing up as a kid, and we know the bigger the space, the more money we're going to make on those rents. Now you get to become that tycoon without having to have the cash flow up front, right?
That's right. Yeah, you can start at Baltic and work your way around the Park Place and Boardwalk, baby. But you're right. You got to start someplace, and that's the better place to invest, because houses are still there. They're all going to grow. They're all going to have some jaggeds and sawtooths throughout the years, but over time, house prices always go. So it's a really great program to look at. Now, another one that I'm seeing, especially for some people that need to look at a lower price range home, especially here, we're in the Dallas, Texas area.
We're right here in DFW.
And there are some areas that are more affordable, but they're in the older areas that may need a little love on those houses. There may be some issues with it. We have some loans that we can do to go in and do a renovation to it, to fix it up, to make it to what you want it to look like, and roll that all into a loan and do the remodel for you, so that it may not have everything that you want into it, or it may need a little bit of work, and the people that are selling it don't have the ability to do that for you. We can help you do that to make that home yours right now as you're buying that home. Yeah. So it's a great thing to look at when you're looking at homes, instead of going, man, I need the one that's perfect. Make one that's almost there, that's in the right location, got the right space, it's it's got all the right things, but you want these things done to it, and let us help you make that your home.
Yeah, and I think elaborate on that a little bit. It doesn't have to be a home that needs TLC. The home may be in perfect condition, but you just don't like the way the kitchen's painted, or the color of the cabinets, or just the placement of certain things in the property. And if, let's think about Property Brothers here, right? Hey, let's go in and let's take a look at this house and let's build it into the house that you want. Now, does that mean that you have to have the cash out of pocket to be able to do those things? No, it doesn't. You can use Fannie and Freddie's money to do those renovations.
Absolutely. Yeah, the conventional loans, Fannie and Freddie have a great program. FHA has a really great program for this too. And on FHA, when you upgrade it, it can actually not even cover the appreciated value. There's a space above that they'll allow you to put into the home and still be able to get that FHA loan at a great deal. So there's a ton of ways to do that, to make that home your own and get everything put together right for you. So, and that can also go with the house that you got right now. If you want to do some upgrades to your house, you can do those with the same type of loan in your house to upgrade, to remodel the kitchen, redo the bathrooms, to fix the plumbing that's underneath of it. There's a lot of places where the cast iron pipes are starting to break,
Our videographer knows all about bad plumbing.
Yeah. He's over there writing notes down right now.
Yeah, I think he's applying for a loan right now. He had a property out in California, and he said they had to run, the plumbers out literally once a month to just avoid having to replace all the piping. And at the end of the day, the cost to repair was astronomical to him at that point in time, right?
Absolutely.
We're talking about California real estate, right? So now at the end of the day, was there a solution for him?
Yes, there are solutions for every type of product out there. We just got to look at them. And the thing about with Devin and I both, we have a lot of experience of doing these types of loans. We do still, I go back and look at the guidelines every time I'm looking at a loan program, because
you gotta cross your T's and dot your I's.
Yeah, they change. They get better. They change what they want. And I want to make sure 100% before you're out shopping for a home, before you're out looking at a purchase price that's here and you're here, that you know exactly what you're doing. Because once you sign on that dotted line, I want to make sure that I get the money to the table for you, so that when you get the keys,
close with confidence.
It was smooth and easy, and that you appreciated what we did for you. Because it's not really about who's got the lowest rate. It's about who gets you closed the smoothest and the easiest, and it's just enjoyable, and you love what you did with us.
I love you said that, because I talk about this all the time, right? At the end of the day, buying a home is a big decision for you, and it's a big financial purchase. It's your home, and you want to have a great experience from start to finish. And I look at this the same way I look at shopping for my vacations, right? We take maybe 1 to 2 really big vacations a year. Most Americans do, right? Maybe one, depends on the person. Sometimes it's one every 5 years, right? So the question is, when you're to make that one big vacation, right? Are you going to go stay at the Budget Inn? Are you staying at the Omni, right? Are you going to the Marriott or the JW Marriott? Are you staying at the Four Seasons? The difference in level of service across the board with each one of those is going to be vast, right? Yes. And what's the difference for the most part? A little bit more comfortable pillow, a little bit better service. It's going to look a little bit nicer when you're walking down the hallways, and you can have a great experience with your family. If you just spend a little bit extra with the right people. Now, that doesn't mean that you got to spend extra, but what it does mean is select the right person, right? Don't go with somebody just because you think they got the cheapest deal, right? That may lean into problems down the road, right? Work with the person because you have the most confidence in what they're doing, knowing that they're going to lead you through the process with no headaches to the finish line, because that's really what it's about. This is a relationship business, and you got to be able to work with somebody that you know, like, and trust. And, at the end of the day, if you don't know, like, and trust that person, but it's just about the dollar, you might want to rethink that decision.
Yeah. It's really, you got to make sure that you got somebody that's in your court. Anybody that's out there, that's the bottom line, the big lots. It's not where I'm shot. That's why they're going out of business, right? It's because their model didn't work sustainably. But it's really, you want to make sure that who you work with is going to be there when you need them, night, day, whenever time that you need to talk to them, that they explain things to you so that you know exactly what you're getting up front. And if there's something that changes, there was a reason why. Yeah. I get questions all the time. What's your rate? Right. And I'm like, when are you buying? And they're like, well, not for a year. A rate today means nothing for
That's true. 100% that's true. Or the alternative, they talk to a couple different lenders, and they come to you and they ask for the rate quote. You've given the rate quote, and they're comparing you to a rate that they got 6 days ago or a week ago or even 3 days or even yesterday. right? Because this market is always moving, and you, the consumer, need to know that. Literally every single day the market moves. Now, if you're savvy and you're watching that, you already know, right? But if you're the average consumer, you may not know that the rates literally change every day and sometimes multiple times within one day. So if you're comparing something that you saw from somebody a week ago, 3 days ago, or even yesterday, it may not be an accurate comparison.
Yeah, even 5 minutes ago, sometimes right now, with the market volatilities we're in right now.
What time is it?
Yeah. As a matter of fact, I talk to people all the time that they listen to the radio or the TV, and it says that the rates are up. And I'm like looking at the chart that I look at and wake up every morning and open up, and they're down. Yeah. And the rates, the next day they say the rates are down, and I look at it, the rates are up. So I'm like, they really can't go by what the market news says, because it's old news by the time it's got to them and it's out. You really need to know what it is. And it really doesn't matter until you actually have a contract and a closing date. Closing date's the most key one, is because when we go to lock the rate in, we have to lock it through the closing date, because that's the key date that we have. And if that date extends out, we may have to work on that. But it's knowing that somebody's going to be there and has your back, and it makes sure that you have your options. And we have a great programs to show you how these options work and what's your value and investment and how that can grow and compound for you. So that's what our job is. It's not just, grinding somebody through the meat grinder and saying, yeah, I hope you get out of here. Bless you. If you don't, just go down going out and you lost money.
Well, if you're out there doing your job right, it's not McDonald's, right? You're not pulling up to the window and saying, hey, I want, this with side of fries and a cheeseburger, right? It's, hey, well, I know what you came in for, but let's take a look at that and let's make sure it's the right opportunity for you, right? And then really laying it all out on the line and saying, look, I like the option that you looked at for these reasons, but let's talk about why these might be better for you. It's going back and looking at the motivational factors for why they're doing the transaction and where they want to be in 1 year, 2 years, 5 years, 10 years. And then saying, well, is this really the right decision for you? Is it smart for you to come in and buy down rate on this, or use your own money out of pocket? Maybe you don't want to use your money out of pocket. Maybe you don't want to buy down the interest rate. At the end of the day, your position is going to be dependent upon your scenario.
Yeah, 100%. I mean, everybody's different. We don't wear the same clothes. We don't wear the same shoes. We don't eat the same food. Everybody's different. And I don't want to treat anybody the same as everybody else. It's all listening about what is important to them, what's their terms, what's their guidelines, what's the that they're looking for in that home.
Yeah.
And
what's your journey?
Yeah. Fitting that journey to fit to where when they open up that door and they walk in and they go, this is mine.
I'm home. Yeah.
A quick story. I had a client recently who his parents had a house and they had a lake house, and they decided they retired. They were going to go move down to the lake house. So they sold the house to their son. Their son still lived in the home. They gave him a great deal on buying it from them. We used the equity as a gift of equity, so that he didn't even have to bring money to the closing table. So all he had to do was, he had great credit, he had great income and stuff. We got everything together for him. We put it smooth and easy. We're sitting at the closing table, and he's sitting there, and he's just like stone cold, like, oh my God. And I'm like, well, what's going on, man? He goes, I own the home that I was born in.
Yeah, that's awesome, man. That's awesome. You took him home, you brought him home. Well, Jerry, I can tell, brother, you're passionate about what you do. And that's important, man, to have somebody that cares that much, right? That cares about what's happening in your world and is going to get you there and make your dreams come true, right? For him, his dream was going back home. You took him there.
Yeah, it's an awesome thing to do for folks. So
yeah,
I love this.
Well, Jerry, I love that you came on, man. And I love that. I think we covered almost every program that we have in the market all in one episode. I don't know how we pulled that off. The only one I don't think we mentioned was the bridge or your standards, right? But at the end of the day, it sounds like if somebody is looking for a solution, you probably have that solution.
Yes. Yeah. As a matter of fact, I've got a client right now that's looking for a bridge. They've got a house that's free and clear, and they want to buy another house. So that other house that they're looking to buy, it's got a contract on it. It's got to close. So we're doing a bridge loan to give them the money to be able to buy that home. We're going to hold that home now that they can move out of it. And then the house is cleaned up and clear up, and they don't have to go out whenever somebody wants to go look at the house. Yeah. They don't have to, worry about somebody looking through their stuff. and they can sell that house and then pay off the bridge loan to this. And they've got the house that they wanted out of this whole process. And it's a great, smooth, easy thing to have.
Absolutely. Absolutely. Well, Jerry, what have we not covered today that we should have?
You know, I tell you, the reason I moved here is this guy right here.
Oh, my man. Appreciate you.
Yeah. We met on Zoom calls, and just listening to him and his passion of sharing and caring with people like me as other loan officers without any ask for return of this. So after many Zoom calls with him in Scotty,
our boy Scotty,
I reached out to him.
Yeah.
And here we are. And I'm telling you, it's probably the best decision I've made in my 23 years is to be here working with this man.
Well, we're going places together, brother, and I'm excited to have you here, side by side doing this market with you, brother. And, Jerry's right here in DFW. So if you guys, have caught my show, we do lending nationwide. We're in about 34 states, but my backyard is Dallas, Fort Worth, and Jerry, Larry, Jerry is now right here in my backyard.
Yes.
And so expect to see us doing a lot more stuff together moving forward. And, if you want to have an opportunity to work with Jerry as a business professional, we already know he's going to. Jerry, will you swear it on the Holy Bible? No joke. He brought a Bible with him. But Jerry, if the folks out there want to find you, brother, how do they get in touch with you?
Well, the best way is my email's jholcomb@premierlending.com. It's HOLCOMB. My phone number, 214-680-4060. That's my cell. You can call or text me. That's what I'm here for. Yeah. If I don't answer the phone, it could be because I'm playing ice hockey at the rink or racquetball, and I don't take my phone to either of those places, or if I'm out to dinner with my lovely wife. So, but if you text me, I will respond as soon as I can.
To a fault. Jerry's always available. That's one thing that I love about him. It's one of the reasons why we wanted to bring him over here to the Premier team. And it's one of the main reasons why I wanted to spotlight him here today on the Loan Officer Success Partners. So, Jerry, man, brother, super excited to have you here. By the way, if you didn't catch that, it did run right across the bottom of the screen, but go look at the description and find Jerry right there. While you're at it, what's your Instagram?
My Instagram is, I just changed it yesterday. Oh my God, we'll have to put that down there too.
Yeah, we'll drop it down there. But what I want you to do is go over there and follow him too, right? Yeah. Make sure you follow Jerry and make sure you comment on his page. And if you like the comment today, share it with 3 of your friends or 3 people that need to hear it. That's super important, man. So, well, Jerry, brother, absolutely. I am so glad to have you here with us. And guys, we're glad to have you here with us too. Thank you for joining us today. And make sure if you haven't already followed us, make sure to follow. Hit that follow button. Find us on all the different channels. We're on Homes Begin here on Facebook, Instagram, TikTok, YouTube. We've got some podcast networks you can find us on too, but follow everywhere. Like, comment, and subscribe. We're going to keep bringing this content back. Forward it to let's phone some friends. Forward it to 3 people that need to hear the message, that need to know that Jerry's out there and he's here to help take care of them with whatever program you need. Sounds like you got them all.
Absolutely. We have every program that we can find out there that we can do. And if not, we will search it up and make it work, because that's what we're here for, is to help you get the right loan for the right time that makes sense for you.
Yeah. Well, Jerry, you're home now, and let's get you home. Until the next time, we'll see you guys.